Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a 5-wave structure to the upside, currently working on a wave 3 or potentially a wave 4. It's quite difficult to know exactly how far a wave 3 will go until you get a bit of a bigger retracement to the downside in a wave 4, where the most common target for a wave 4 is the 382 to the 05, currently sitting between 32.4k and 31.3k, pulled from the low of 2 to the current high we have of wave 3. However, if price continues towards the upside, then we can look for the 4.618, because as you can see, I got these 618s on my chart over here, and these are always important targets for a wave 3. The 1.618 is usually a minimum target, got respected on the lower time frames here, but eventually closed the candle to the upside. 2.618 hit, 2.618 acting as resistance, ranging on top, 3.618. If we now pass the 3.618 without a proper retracement to the downside, then we can look for a wave 3 to end at around the 4.618. The 4.618 is in nice confluence with this golden target box over here, which is sitting between 38.5k and 39k. And you can also see that the trend-based fib extension 4 over here is sitting inside this blue target box, sitting between 36.7k and 37k. Now, if we then zoom in to this structure over here and we go to the 4-hour time frame, then in the bullish scenario, we're looking for continuation to the upside. So this low over here is the end of this horizontal range and then a WXY. And then over here, we're looking for a wave 1, wave 2, continuation to the upside, and then a bigger wave 3. The problem with this scenario that is lowering probabilities is the 0.618 that has been hit over here for a wave 2. The 0.618 is a rare target for a wave 2, most commonly between the 05 and the 786 is a target for wave 2, the 886 is rare, and more common for a wave B or a wave X, meaning that any move to the upside is usually a higher probability of being a C or Y, which then in turn increases probabilities for a move towards the downside to then take the lows over here. But in this particular scenario, the bullish scenario, we're looking at this to be the low of 2 and continuation to the upside in a wave 3. Now, if we look at a bit of price action from the past, then of course price, it never repeats, but it can rhyme. And this is a bars pattern from price action in the past that Santiago mentioned in Discord, thanks mate, where this is basically a copy put on top of the current price action. And you can see there's quite a lot of overlap between the current price action and the price action we had in the past. You can see we had a bit of a range, but more importantly, we had this push to the upside, move to the downside where this low over here in pink did not take the low of the range basically before this low was made. So it didn't take the lower lows over here. It ended higher, continued towards the upside. And that could be quite similar to what we see here. Push to the upside, push to the downside, but it's never going to take the lows of the range prior. Now, if we then zoom in to bullish low time frame scenarios on the micro, I mean over here on the 1-hour time frame, we're looking for a wave 1, wave 2, another wave 1, another wave 2, and now we're looking for continuation to the upside. This scenario is invalidated the moment price is really going below this blue wave 2 over here, sitting at 34.3k, but you're going to be looking for continuation to the upside and higher prices to come. Another alternative scenario is that this is a 1, 2, 3, 4, 5-wave structure. Now, this is an expanding diagonal, which in general is very, very rare, so therefore it has lower probabilities. But in this scenario, wave 2 retraced to the golden pocket, that's common for an expanding diagonal. Wave 4 retraced to the golden pocket as well, which is also common, where in this particular scenario, all of the waves are then zigzag structures for a leading diagonal, ABC in wave 1, 3-wave in 2, 3-wave 3, and then eventually a 3-wave 4, which is a double zigzag. And then you're going to be looking for another 5-wave or a zigzag, 5, 3, 5, to the upside for wave 5, where it at least has to hit the 1-to-1 over here, which is sitting at 35.5k. That is a minimum because wave 5 has to be longer in price than wave 3. If we then zoom out and look at the bearish scenario over here, then on the 12-hour, we're looking at an ABC structure of a bigger expanding flat and then an A, B, and eventually a C to the downside. As long as price is not going to move above the 1.618 over here, this scenario still has some probabilities. In this scenario, we're looking for a wave A as a 5-wave structure, expanding diagonal, again, also rare. Wave B retraced to the 382, which is a common target for B. And then inside wave C, we're looking for a 5-wave structure to the upside in 1, 2, 3, 4, 5. Now, the reason that for me wave 5 and C are not finished over here is because this structure to the downside on the lower time frames does not look impulsive at all, and therefore it looks more corrective, and therefore probabilities are higher. We're going to take at least a 36K high once more, which therefore means I put 5 and C over here with the 1.618 sitting at 36.4K. Potentially wave 4 is already in, and we are now looking for a 5-wave structure to the upside to finish wave 5, or if price would find its way to the downside, then this wave 4 can move to the right as well. The only problem with that scenario, if price moves to the downside over here and wave 4 moving to the right as well, is that this wave 4 is then going to be extremely long compared to this wave 2. In Elliott waves, there is a time relationship, there's a price relationship between the waves, not only price, also very much time, and wave 2 is very short as you can see, and wave 4 tends to be about maybe like a maximum of 3 to 4 times longer than wave 2, but if it comes down once more, it's going to be a lot longer than that, lowering the probabilities of this particular scenario. If we are then looking on the lower time frames once more, then in this particular scenario, we are looking for a move to the downside. But as mentioned, I do not like a 5-wave structure to the downside over here. And that is mainly because if you count this as a 5-wave structure to the downside, then the low of 1 and the high of 4 have overlap, which is not allowed in a normal impulsive structure. A regular impulsive structure, no overlap between 1 and 4. Then you have to think about diagonals, but the diagonal doesn't work because wave 3 is longer than 1, but wave 5 is shorter than 3, and that's not allowed as well. So that is also the reason why this scenario and then a flat W, zigzag X, zigzag wave Y is definitely not a highest probability scenario at the moment, just because of the overlap over here. Of course, we always keep our eyes on local price action, but this from an Elliott wave perspective does not carry the higher probabilities. Same here, which is the most bearish scenario if you're looking for an impulse to the downside for much lower prices to come. Again, then this has to be a 5-wave structure, but you have overlap over here, which isn't allowed. Diagonal doesn't look good as well. So currently it does not have the higher probabilities. Invalidation here is taking the high at 36K. And if we then look at a more bearish scenario, which is still possible, but it does mean price has to find its way to the upside first, is that you're going to be looking for an ABC flat, which means wave A is now a 3-wave structure in a double zigzag, WXY. Then we're looking for a zigzag WX and eventually a wave Y to the upside over here, where the most common target for a wave B is between the 1.236 and the 1.38, which is between 36.4K and 36.7K, which if I open the target boxes is just below that blue target box over here between 36.7 and 37K. So that is quite interesting. Less common target is the 105 and the 1.618, with the 105 sitting at 36.1K and the 1.618 at 37.2K. Now in this scenario, after a wave B, we then want to see an impulse to the downside for wave C to also grab a couple of the lows over here, because we got a lot of liquidity to the downside. Low 1, low 2, low 3, low 4, low 5, and then we even have a couple of lows here as well. So there's a lot of liquidity to grab for them, potentially then that move towards the upside. If we look at the CVD divergences, then we do have bullish CVD divergences over here building from the low to the higher low. We got bullish CVD divergences. Target is this high. Also more locally, bullish CVD divergence. Target is also this high over here. Oh, sorry, this one already played out, by the way. The target was this high, which got wicked. So that one already played out. But this bullish CVD divergence hasn't played out yet, where this over here is the target of that bullish CVD divergence. We also have a bearish, by the way, CVD divergence over here, which I can show you on the chart. So here on the 15-minute, you can see a higher low in price, much lower low on yellow, bullish CVD divergence, and then between the high and the lower high created at the moment, lower high on price, but look at the yellow line over here, we have a higher high on yellow. as you can see. So that's also a bearish CVD divergence, which is something we do have to at least keep in mind. More locally again, if we then move to the 5-minute, then you can see here higher lows on price, but CVD moving down, which again is bullish, showing absorption of market shorts. And also the first CVD that appears on the chart has, based on probabilities, the highest probability of playing out, which would in this case be the bullish CVD divergence. If price takes this high, however, it is going to move above this target box, and that's going to be quite interesting. We do have a daily there which hasn't fully been hit at 35.4k, but if price can manage to close and start moving above the daily, then I would personally be looking for the high at 36k. Now, if we then finally look at the probabilities of the different scenarios, then currently the probabilities over here on the medium time frame are higher for bullish continuation, mainly also because over here on the lower time frames, an impulse just does not look good. It's much better as a three-wave structure instead of an impulsive structure, which therefore means that even if you would move to the downside, you're still going to be looking for higher highs to come. On the low time frame over here, I'm pretty neutral. I prefer to look what's happening over here. This is a three-wave structure which either is finished for then continuation to the upside in the bullish scenario over here, the low time frame bullish scenario, or we are then looking for the low time frame more bearish scenario, where also I would then personally be looking at the moment for price to take this high. So the bullish and the bearish scenario at the moment that have the higher probabilities are looking for this high to be taken before potentially the low here to be taken. On the micro at the moment, probabilities are highest to take this little high over here at 35.4k. That is currently the highest probability scenario on the micro, like 15-minute. So we have to wait and see if that is going to happen potentially today. And I also write over here, probabilities increase to take 36k highs as well. The moment you take 35.4k, move above the daily, probabilities increase, you're going to take 36k as well. Volume as structure is going to decide if we're then going to be looking for a flat or potentially continuation in a more bullish scenario, where the question is, are we going to do this? Or are we going to do that? Of course, that is something we have to wait and see. By all means, you always have to trade safe and have a solid plan. Currently, we are at resistance. This was support, and we still got a blue box support over here between 34.3k and 34.4k, which is also interesting, but we keep an eye on local price action. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.